Hey guys, Max here, and this is your daily update for yesterday, the 1st of March. It was again a pretty interesting day. Markets weren't too happy for a couple of reasons, and it is sort of to do with the war in Ukraine, but it's really about the consequences around the world as a result of the war. Now, this video is going to mostly be about the finances, just a quick recap of what happened, and then later today, I'll put out a second video looking at what's actually happening on the ground in Ukraine. So markets were unhappy, but what actually happened? Well, the S&P 500 fell about 1.5%, the Nasdaq went in the same direction, falling 1.6%, the Dow Jones as well fell 1.8%, so American equities were unhappy across the board. European stocks went in the same direction, but fell a little bit harder, with the Stoxx 600 falling just over 2% and the FTSE 100 falling just under. Basically, fears have switched over from the direct impacts of the war in Ukraine on things like how sanctions might impact the earnings of companies with lots of business in Russia, or for companies like BP who will have to book major losses, and now the fears are all on the idea that the war in Ukraine will spike inflation, make the situation even worse, and central banks will have to raise interest rates to try and bring everything back under control, and as we all know, markets are terrified of rate hikes right now. Now, are these fears actually warranted? In short, yes, definitely. The big issue is, of course, with energy prices, oil and gas, and then electricity as a result of that. And well, energy prices are just going to keep going up. It's very simple, and of course, energy prices have a direct impact on the cost of literally everything in the economy as well. Oil prices don't just determine shipping costs or airline ticket prices or the cost of the gasoline in your car, they impact the cost of plastic used in almost everything we consume. They impact the cost of moving things by truck, which means everything in a local store gets more expensive to supply. And of course, that applies to things bought online as well. Gas prices don't just affect your gas price for heating your home either, but electricity prices across the world as we burn natural gas to produce electricity. And that, of course, impacts everything. Literally, it means offices are more expensive to run and commercial premises, which means that service-based businesses see higher costs and everything that's made needs power or some form of energy to run, and those costs will go up. Fears of inflation are basically very well warranted. But that does take us on to the second problem, which is fears of interest rate hikes, and this is again a problem that's well warranted. Over the last few months, we've been hearing a lot about interest rate hikes to try and curb inflation, but since the start of the war in Ukraine, focus has shifted. The markets were pricing in the idea that the West and the economies of our countries would be so worried by the war that interest rate hikes wouldn't come because we'd be trying to stimulate demand as opposed to trying to halt inflation, but that idea seems to have gone a little bit out the window. Now the fears aren't that consumers will change their spending and the economies might enter a recession because of the war. No, now the fears are that the war will create huge levels of inflation, and this will be accentuated by the already high inflation we're seeing, and markets, central banks will have to react and they will raise interest rates even higher than they had initially planned. JP Morgan, for example, is estimating 9 rate hikes, one after the other, throughout 2022, which is far, far more than anyone was expecting a month ago. This is, of course, scaring markets. It basically means that valuations will come down. We've spoken a lot about it in the past, so I don't really want to bore you all. But what happened elsewhere in the markets outside of equities? Well, the big one is that commodity prices across the board have increased, and they're now at their highest point since 2009, their last peak as the global financial crisis hit. In particular, of course, as we just mentioned, energy prices are up, and that's the most visual one, but wheat, grain, and corn prices are all up by large amounts as well. Russia and Ukraine supply about 25% of the world's corn and wheat, so the war in Ukraine threatens that. We have sanctions against Russia, making it difficult for them to export, and Ukraine is, of course, a little bit preoccupied to be farming right now. As of today, oil prices in particular are scarily high. WTI crude is sitting at just about $105 a barrel, up almost 10% from yesterday alone, and Brent crude is sitting at almost $111 a barrel, so really damn high. The flight of investor capital into safe havens is continuing as well, firstly with the US dollar continuing to perform well. This is counterintuitive to what some people have been thinking, as we're hearing about Russia, India and China considering reducing their reliance on the dollar, choosing instead to trade and do business in other currencies after seeing how much influence the Western world has over an economy like Russia's. But that impact seems to be very minimal on the markets, and investors like the security of the world reserve currency, which the US dollar still is. Bonds are seeing massive inflows all over the place. The US 10-year Treasury yield fell 10 basis points and now sits around 1.73%, back where it was a couple of months ago. Britain's 10-year yield fell 28 basis points yesterday, a really major shift, and the German 10-year yield fell a similar amount and is now once again seeing a negative yield. Gold as well, another safe haven, has been performing well, up another 2.5% since yesterday, now sitting around $1,950 an ounce, nearing its peak as the invasion of Ukraine actually started. Now, the final market to look at is, of course, crypto, which has continued to do well. Of course, we saw the market tank as the invasion took off and risk-on assets everywhere collapsed, but as the nature of sanctions against Russia started to rear their heads, we saw some potential use cases for crypto emerge in the conversation, and this seems to have caused a small bull run in the market. As of right now, Bitcoin sits at about $44,000 and Ethereum at about $3,000, so modest gains of a couple percent from yesterday, and similar stuff was seen across the board for altcoins as well. Now, I've seen some people suggest that the fundraising campaigns that Ukraine have been starting are some of them using crypto, which might be the reason for this strong performance, and there does seem to be some potential for that to be the case, but I think it's probably the junior partner here with some exceptions. Polkadot's founder, for example, donated $5 million to Ukraine once they opened up a wallet for that crypto, and the network saw a 5% pump on that news as it brought some attention to the project, but I think on the whole, for most coins, this is actually quite a minor effect. Now, why do I think that? Well, in short, because far more money is being donated by fiat currencies and bank transfers than via crypto, and crypto isn't actually solving a problem here. Traditional financial markets are working fine for Ukraine. For Russia, however, crypto is presenting the possibility of solving a problem, and that problem is getting around sanctions. Very simply, the West, the US and Europe, they can't really stop Russia from transacting with something like Bitcoin. The network just doesn't work like that. The closest they could get to that is leaning on and pressuring exchanges and trying to get them to just not work with Russia or its banks, institutions or companies. But even then, the Bitcoin network itself can't just be blocked. Peer-to-peer transactions will always work, and that presents the possibility of Bitcoin being used to get around these sanctions. Of course, a bunch of other projects have the possibility to do the same thing, usually with slightly different processes. Monero, for example, could help Russia hide these transactions, and there's even the possibility that Bitcoin's pump is directly caused by Russia or India or maybe some Russian banks stocking up on Bitcoin, preparing to use it in the future for transactions, but it isn't clear if this is the case, and I haven't necessarily seen anything credible suggesting this, but it is possible. Either way though, the crypto market has had a good start to the week. So then, what's new with Russia in the country and with their companies and their economy? Well, the exact same stuff that was happening yesterday. Everything is on the brink of collapse and it's going to go down unless these sanctions are lifted, and Russia has just announced that they're going to continue with their invasion. They're going to escalate and keep throwing more troops in, so sanctions are probably going to get worse, not better. In particular though, Russian stock markets are still closed and they're going to stay closed for the rest of this week at least, according to Russia's regulating authorities. This is, of course, just to ensure that stock prices don't crash. The market can't collapse if it just never opens, right? Right, but that doesn't mean that there aren't problems here. There are loads and they are huge. Sberbank, that huge Russian bank that trades in part on the London Stock Exchange, well, its shares have fallen in value 99.9%. A couple of weeks ago, they were worth $15 each, and today they are worth 1 cent each. This is, of course, absolutely insane, and it's really because sanctions mean that Western investors aren't allowed to own these shares even if they wanted to, so everyone is selling and no one is buying, and the shares are practically worthless. The company itself is also seeing major problems. The European Central Bank has ordered them to close their operations because they are seeing a bank run. Basically, people want their money from the bank doesn't have that money, that's it. What can you do? Nothing. The bank has basically stolen your money and can't give it back. Sanctions are hitting other parts of the Russian financial system as well though. Russian bank cards issued by Russian banks, well, they no longer work in the West, which is hugely influential to Russians living in Europe who still use those Russian banks. Again though, what can they actually do here? There are also continued reports of bank runs starting in Russia itself, but that has mostly been delayed by a withdrawal limit of $20 for each person, and the Russian central bank literally just giving cash out to banks, which again is just a band-aid on a life-threatening injury. Lots of individual companies are taking sides as well. Google Pay and Apple Pay no longer work in Russia. Apple stores aren't opening in Moscow. Visa and MasterCard may go that same direction as well and just shut down operations. Boeing is refusing to work in Russia anymore. They've shut down their operations and now they're refusing to work maintenance or provide parts to any planes in Russia, which will pretty much cripple their airlines over time. Russian state-owned media organizations are being banned in loads of different countries and on loads of different platforms. Russian ships are banned from entering any ports in the UK, and Russian airplanes are banned from almost every country in Europe. In short, these sanctions are everywhere and they are hugely impactful, and they will cause Russia to go into an awful recession if they stay in place. And by the looks of the war, how it's going and how Russia keeps escalating, the sanctions aren't going to disappear anytime soon. Now that is it for this video. I will hopefully be back later today for a second video looking at the war itself, giving you all an update on the situation on the ground. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, you don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Just make sure not to use Tether. Thank you all for the support, thanks for watching, stay stoic, until next time.